Hi guys, it's Ian and this is your weekly market wrap-up video. It is Saturday the 12th of April 2025. What a week. Trump has made FX great again. We're seeing high volatility across the board. Obviously with Trump delaying his tariffs, we did see quite an aggressive move to the upside in stock indices last week, and now we're seeing this period of consolidation, really with the market awaiting what's next, what's around the corner. With regards to what's around the corner, we've got quite a busy week with regards to data releases next week. Monday, there's nothing really high tier. Tuesday, overnight, we've got the RBA minutes. That's at 1:30 in the morning UK time. Then we've got UK employment first thing on Tuesday morning. We've got the ECB lending survey. We've got the Bank of Canada consumer price index, so inflationary data coming in on Tuesday. And then Wednesday, we've got the Chinese data overnight, followed by sterling consumer price index. Again, more inflation data to take note of. We've also got the Bank of Canada interest rate decision, US retail sales. We've got Fed Chair Powers speaking later that day. Then on Thursday, we've got the Australian employment data, followed by the ECB rate decision press conference. So yes, if we thought the markets were going to quiet down next week, it looks like we're going to see some continued volatility. Let's get to the charts. What we're going to talk about, what we're going to focus on is DXY, which is the dollar index. I'm going to talk about cycle analysis. It's come to the forefront this week. We're then going to have a look at gold, and then we'll finish off with the US stock indices and what the long-term picture could potentially hold for those at the moment. So let's get to the charts. So just to highlight what we have here, this is a trading view setup. Middle chart at the bottom is a monthly, weekly, daily, 8-hour, 4-hour, and then hourly on the bottom. And what I want to concentrate on is the daily chart. We're then going to actually look at short time frames, and then I'm going to look at what's called DeMark indicators. I use these indicators to highlight possible reversals or corrections in sentiment, and it's quite important when we're looking at those indicators to highlight whether or not we're still going to see a dip lower in DXY. So this was the pattern that I was concentrating on. It was a bat formation. It completed and we got a correction to the upside, but then we've seen this continuation lower. Elliott Wave enthusiasts might look to this as a fifth wave extension. What is more important to me is the cycle analysis. So often what we will see is a run of 3 cycles, and you can see here right at the top was the start of the first cycle, which was on the 13th of January. Then we've got this cycle here, and then we've basically got the third cycle, which potentially finished on Friday, but it actually lands today on Saturday. So the cycle could also finish on Monday. So it's a bit hard to highlight when this cycle finishes, when it lands on a weekend. What we did see continued downward pressure in the dollar index on Friday. Now, if we go to shorter time frames, what I can see, and there's a very good book out there, and it's called Trade What You See, Don't Trade What You Want to See. So what I can see is a move to the downside. Okay, we've got a 261.8% extension level. Elliott Wave enthusiasts would basically say that this is the possible completion of a bearish 5-wave count. What do we have? Well, we've got a corrective channel formation at the moment. It's not an aggressive move to the upside. What will normally happen at the base of an Elliott Wave count is either an ending wedge pattern or a reverse head and shoulders formation. Now, I could if I sort of squinted, I could say, well, this is the left shoulder, this is going to be the head, this is going to be the right shoulder, and we're going to break higher. So we could potentially say that this is the completion of the fifth wave count, and we're going to move to the upside. However, if I go to DeMark indicators, I'm just going to get the right product on DXY. Okay, what DeMark says is that when we get a 9 count, then we should see a correction to the upside. Now we've got a 9 count here on the 8-hour chart, easy for me to say, and we saw this move higher. However, other time frames are still highlighting the potential for further losses as far as DeMark is concerned. So when we go back to this chart, what I'm really looking for, and I want to see a reversal candle on the 9 count. Now that was just a pin bar doji or an inverted hammer formation. It's not good enough. What I really want to see is a large engulfing candle at the base of the trend. Why? Because it gives me an entry level. It gives me a stop loss, because my stop loss is below that bullish reversal formation, and then I can calculate where my profit is going to be. And remember, what I'm looking at the moment is swing trades. These aren't intraday trades. I mean, I'm looking for reversals for at least a month in these products. So just to highlight again what I believe we will probably see on Monday is something like this. So breaking lower to complete that 9 count on the 6-hour chart, and then getting a move to the upside. So now we've got our base. We're basically what we're looking at in DXY. I'm looking for dip buying opportunities, and I can reflect that now back onto other dollar products. And with that in mind, let's get to these charts. Obviously starting off with euro dollar, as it's the major currency pair, and we're going to look at this time frame. Again, Elliott Wave formation, it broke. Well, we saw a pause in price action at 261.8%, and then we've broken to the upside. Now we had a 361.8% extension level. It's uncommon, but it can be seen as in an Elliott Wave formation, and that's located at 114.60. What we got on Friday was a swing high of 114.73. But if we go to DeMark indicators, and we might as well have a quick look. So again, just getting these on. There's no 9 counts here. So the 8-hour chart's got a 6, the 6-hour chart's got a 7, and the 4-hour chart is null and void as far as I'm concerned. So really my concentration, what I like to see is mirrors. So the 6-hour chart on DXY has got a 7, the 6-hour chart on euro dollar has got a 7. So what I want to see is both of them hit a 9 count at the same time. So I believe there's still scope for euro dollar to move to the upside, probably just to take out weak stop losses that have sold into that fib on Friday. And if we go down to a shorter time frame, okay, so putting our fib extension tools on here, and I know it's going to read 261.8% because it's virtually a mirror image of the DXY, but what we don't have again is a solid reversal formation. What we could say is this is a potential head and shoulders, so left shoulder, head, right shoulder, but again what I don't have is I don't have that DeMark 9 count reversal. So what I think is going to happen is this is going to become, Friday's high is going to become the left shoulder. And what we will see, come on Coleman, is something like this instead. So again, volatility. What do we not have on Monday? Well, we don't have any data releases. So there isn't a lot driving the market on Monday with regards to DXY and the euro. I doubt we'll consolidate all the way into the ECB decision on Thursday, but it's of course it's a possibility. What we want when we're analysing is we want to analyse the markets with chart formations, Elliott Wave formations, fib levels, ending wedges, head and shoulders, not overcomplicating, but they're the sort of your basket of analysis tools, if you like. We then need to overlay a system, and it's the system that puts us into the trade, because it's the system that tells us that we've got a reversal in sentiment. So those big bearish outside candles, evening doji stars, morning doji stars, an overlay that gives an emphasis to your analysis. Sterling dollar, let's have a look at this time frame, and this is really one that I want to get hold of, because the cycle analysis is aggressive to the downside. So what we have here, going back to cipher pattern analysis, we had the completion, 3 cycles, okay, so this is cycle 1, it was a base, the start of the cycle 1, cycle 2, and then we've got cycle 3, so happening on Friday or Monday, I believe will be the swing high. What we have got is the completion of a bat formation, so this is the cipher pattern, it completed at 1.3208. Here we've got this confluence level to the downside at 114.05. So this, as far as the dollar index is concerned, when I'm looking for upward pressure in DXY, this is the one that I want to play predominantly, because it gives me a target level, a medium-term swing target, which is this crab formation at 114.05. What's common in this BC leg is that we'll retrace either 32% of the last decline, so the AB leg, or we'll retrace 88.6% of the last decline, and that's quite important when we get to this time frame. Okay, so this is the intraday time frame, so that's leg A in the big picture, and we're now moving higher in leg B. 88.6% is at 131.50. We made a 131.33 swing high on Friday, so there's still ample scope for a move to the upside. What have I put here? I put a zone that I want to get involved in, so 131.15, 131.50 is basically my sell zone. Why do I like this pattern so much? And I won't waffle too much about this currency pair after I've just explained this. The most important factor in all trading is your entry, your stop and your target, because that then gives you an R rate. Okay, if I get a reversal signal up around current levels, and this is my target, the pattern will be broken on a move through 1.3208. It gives me an R rate at the moment, which is the risk against reward of about 9R. So basically every £100 that I risk, I've got the potential to make 900. Most risk reward factors are around about 2 or 3. So if we can catch one of these strong patterns, then it really does offer a great setup for a medium-term swing trade. Going on to, I'm just going to show this. So that was sterling dollar. Okay, we've got a 9 count in here, but it's not a reversal. We've got a 5 count on the 6-hour chart, and we've got a 3 count on the 4-hour chart. So again, what I want to see a move up and then an aggressive reversal. None of these time frames really are showing that as yet, and in fact the 9 count on the 8-hour chart was an inside bar. Now an inside bar just highlights indecision. Okay, so let's get to the other products quite quickly, as our sort of 15-minute window is coming to an end. Here, dollar Swiss, multi-month lows, if you like. I think even though we sort of neared 9 counts on this pair, there's no real sort of indication of a change of trend. We have got a wedge formation, but this could just be a 4th wave wedge, and then we sort of push lower. So again, 224%, 261.8% at 78.41, looking to buy dips. Aussie and New Zealand, not so much really in focus. Why? Because I still believe that we've got upside pressure building in stock indices. Now, if stock indices move to the upside, you don't really want to be selling commodity-based currencies, because they're not going to collapse as quick as sterling or euro. So I'm going to leave those two off for the time being. What we can have a look at is gold, and again hitting big figures here in gold. We're now at all-time highs. This is where I'm seeing support 2940. Again, is this the start of a new cycle? We haven't got any reversal formations at the top. We've got a 361.8% extension level located at 3,222. Elliott Wave analysis does highlight a 5-wave count. That should dictate that we get a correction to the downside soon. Looking at DeMark indicators, even though we've got 9 counts, they're just posted inside bars. That just highlights indecision. What we need to see is a solid reversal in gold to then potentially take it down over the next 3 months. Let's quickly have a look at the US 30 and NASDAQ, because I want to highlight what I'm seeing in those two indices as well. So obviously an aggressive move to the downside. When we look at this weekly chart, we really can see some solid reversal in this index. This was a very strong down week last week, very strong up week, countering this sell-off, or this original sell-off. So what do we expect? Well, when we go to this time frame here, we've seen a stalling at 72.6%. Now that is an uncommon fib level, but it does make a cipher pattern. What can't we do here? Well, we can't lay anything as far as Elliott Wave's concerned, because this wave here to the downside has overlapped this wave, so it can't be wave 3, 4, etc. But if we use this tool here, sorry, we can this. Okay, it suggests that we're currently within the BC leg. Okay, so this sort of choppy price action. What we've got here, we've just got numerous inside soldiers. There's nothing driving it. The market's waiting basically to see what's going to happen next with regards to tariffs. What I would like to see is I'd like to see a move further to the downside in the BC leg of this crab formation. I'd then like to see a large bullish reversal candle formation at a swing low, and then for us to ride higher up to this 224% extension level, which is located around about 46,390. I can't remember if it was the S&P or the NASDAQ that offers a similar pattern. Yeah, the NASDAQ. So again, 72.6%. If we go to our fib tool, and we can definitely say that that is a swing high, because we've had quite an aggressive move to the downside. And basically what you want to be doing is you want to be taking it from this wave, and then you want to be taking it from this wave here, reversal wave, and they need to coincide. They need to be pretty close together, and I haven't quite got that on there. So if we move it down there, and then we look for these confluence levels. So again, consolidation inside days possibly on the daily chart, highlighting indecision, and then the dip buying opportunity. What do we not want to see? Well, if it moves below here, then that pattern is invalidated. So last week's swing low, if it breaks below there, then we don't have a bullish outlook for stock indices anymore. So just to reiterate what I've talked about in this video, cycle analysis is the most important thing for me at the moment. Didn't see a reversal in DXY as I expected on Friday, so I'm now looking for a reversal on Monday. Should be pretty close with regards to cycle analysis. You know, we don't want to go into Wednesday, Thursday next week to see a reversal in sentiment. If that is correct, then we should see an aggressive move to the downside in euro against the US dollar. My focus is on sterling against the US dollar. I really want to see that pattern complete over the next 3 months. Stock indices, the potential to consolidate, and with regards to gold, looking for a topping pattern. Okay, good luck this week, and I'll be back again with more video analysis. All the best.